Hi, welcome to Workplace at the River, where we empower lives at the workplace. My name is Joel, and I'm part of the team at Workplace at the River, and I'd like to welcome you to our Thursday Biz Talk, talks that will inspire you at the workplace. This evening, we've got a very interesting talk for you with a very interesting speaker as well. But before we go into our talk, I'd like to play a little icebreaker with all of you. Shall we do that? All right, so how much do you know about blockchain? So on a scale of 1 to 5, 1 is you know very little, you've got no idea what blockchain is, and 5 is you're very well versed with blockchain and you use it a lot in your business, in your company. So let's have some feedback. All right, this time it's on Menti. All right, thank you for your feedback. Yeah, one of you says, I don't know anything. Okay, we're kind of evening out the scores right now. We're at 2.3 out of 5. Okay. Let's see, let's get a couple more responses. We're still at 2.3. All right, I see 6 of you who have responded. Excellent. So between 1 to 5, okay, we just dropped to 2.1. Okay. And we're up to 2.4. All right, all right. Keep your responses coming in. Oh, thank you, Mrs. Yip, for that response. If you can drop it in Menti so we can see a general feel of the whole crowd that is here today, then we will know, yeah, what is the general feel of the whole crowd. Okay, we're at 2. Maybe we just give it another 30 seconds and then we will carry on. Wow, we are very stagnant at 2. Oh, but there are some of you who are also very well versed with blockchain. So thank you for that. It's good to see that some of you are well versed with blockchain as well. All right. Okay, and we will close this poll right now. So I think it's hovering at 2. So it's good to know that many of you are still questioning about blockchain. You probably have heard about it. You've read about it somewhere. You kind of know that it's related to cryptocurrency like Bitcoin, Ethereum, sorry, something like that. But the thing is, well, there's a lot more, and we are very thankful today because we've got a very interesting speaker. But before I introduce the speaker for this evening, I just like to highlight that for any of you who've got questions, you can drop your questions to the link on screen, tiny.cc/askwater, and I'm sure the speaker, and yeah, you have the picture of him right there. I'm sure he'll be glad to answer all your questions. So without further ado, I'd like to welcome Simon Ulrich. He is the CEO of Regov Tech, Sandrian Berhad, and he'll be talking about a very interesting topic about blockchain, understanding the fundamentals. Over to you, Simon.
Thank you very much, Joel. Good evening, ladies and gentlemen. Thank you for having me. It's my pleasure to speak to you here in Malaysia and beyond. As Joel said, today we are going to talk about blockchain. But let me just first share my screen. 1 second. All right. So before I jump into the topic, just 30 seconds on who I am and what we do here at Regov Technologies. So we are a Malaysian startup. We started in 2018. And we focus on mainly servicing the financial services, helping with backend automation of fund managers, for example. We work with loan originators, we work with insurance companies, and hopefully we work with a bank soon. And we focus on helping them with customer servicing, lead qualification, and as I said, back office and process automation. Capability-wise, we are in blockchain. Well, that's the main reason why I'm here today. But we also provide capabilities around artificial intelligence, be it bots, be it intelligent analytics, and big data management and analysis as well. So that's what we do in a nutshell. The topic today is blockchain for business, and I'm focusing mainly on the fundamentals. So I think I will apologize to the 1, 2, or maybe 3 people that rated themselves 4 or 5 in the introductory question. So you might know a lot I'm talking about already, but I hope maybe you can help me at the end to answer some of the questions we are getting. But the main focus here will be really on the basics and what the technology can do, how it works in layman terms. And I will be also talking about business applications, a bit of a market insight, who is successful. And for those of you who are considering maybe a career, who have a child or a niece or a nephew in the tech space who maybe want to go, is thinking about which specialization they want to show, I have a bit of data at the end as well to hopefully help you to make an informed decision. All right, but without further ado, let's jump into the topic. And I would like to start a bit off with a myth buster here, because as Joel said, most people, when they think about blockchain, I mean, the first one that always comes to mind is Bitcoin, right? So, or Ethereum. So also when I talk to people and say, hey, I do blockchain, that's typically the first thing they ask me. Oh yeah, okay, so you build something on Ethereum. And when I say no, they say, oh yeah, okay, but you're then involved with any other cryptocurrency. Or people that are financially savvy, they say, okay, yeah, it's not a cryptocurrency because it doesn't meet the criteria, so it should be a crypto asset. Or they ask me about ICOs, the initial coin offerings, or if they should buy, or if there's any value in it at all. Another question I get often about is, hey, you know, there are scams. I was even accused to be a scammer myself a couple of times, which I hope you believe me, I'm not. But that's maybe one of the interesting statistics here to share with you. So those of you who are interested in the crypto space, which I will not be talking a lot about, be mindful when you invest in cryptocurrencies. So by the end of 2017, which was the height of the crypto hype, we had roughly 1,500 initial coin offerings that were out there. And by 2019, last year, we could confirm that 78% of them were scams. The other 22% we don't know yet, but 78% is confirmed. And scam here means, so this is people that genuinely had no intention whatsoever to add value. So this was not an entrepreneur who tried and failed. This was people that just wanted to scam and had no intention to give the money or any value back to the investors. Okay, so keep mindful of that. But an important message here for you, I want to leave with you is, if you equate blockchain with Bitcoin or cryptocurrencies, what you're basically saying is all paper is money. Okay, because blockchain is a technology, it can be used for cryptocurrency, it's one use case of the technology, but there are a lot of other things you can do with it. And what I'm going to talk to you about today is about how businesses, be they big enterprises, be it their small SMEs, are using blockchain to generate value, which is much more akin of writing a book on paper than printing money on paper. Okay, so for those of you that wanted to hear about Bitcoin, I'm sorry I have to disappoint you. This is where the Bitcoin talk stops. And what I'm going to focusing on now is first blockchain, or the underlying distributed ledger technology. And so I will explain you what it is, what makes it different. And also for those of you who are in the consultancy space or business decision makers, I also want to give you the anti-speech, so when not to use blockchain, because there are a lot of consultants out there from tech companies trying to push it, because it's a way for them to make money. So I want to give you some tools you can use to challenge back and ask intelligent questions to see if this is a genuine consultant or somebody just trying to take you for a ride. And assuming I talk to a lot of business leaders, or at least people interested in becoming business leaders here, I will also share a bit of a market assessment with you. and give some insight on who is successful in using blockchain technology today, and also talk about practical use cases. And as said, at the end of the day, I can give a bit of career guidance for those of you who are thinking to enter the space, but want to enter the space as employees and not as business owners. Okay. On the use cases, just be mindful. I will spend 30 seconds, 1 minute on every use case. If there's anything you want me to go into much deeper, ask during the Q&A. I mean, I'm happy to talk another 10, 15 minutes about any individual use case you might find especially interesting. Because for me, this is where the meat to the bone is. So the use case is where value is created. Okay, but having that said, so what is blockchain? That's a definition, an academic definition I like, which says it's a way to store data as a transaction, and it stores it in a way that is immutable, transparent, secure, and tamper resistant. Now, you don't need to remember this definition, but I would like you to keep in mind for the rest of the talk is a key characteristic of blockchain is that it is immutable. It's very difficult to change, near impossible to change. And it's very transparent, and it's secure, and it's resistance, very resistant against hacking. Yeah, to the level, and let me use another Bitcoin analogy here. So there's prize money on hacking Bitcoin. It's 10 million US dollars. For 10 years, nobody collected. Okay, and that's not for lack of trying, because the prize money is 10 million US dollars. Yeah, but the technology actually was very secure a few years ago and is even more secure today. So that's one of the key characteristics. But predominantly, it is a way to store data. And I think the easiest way for me to give you an appreciation is to just compare it with a classical database. So for blockchain, I just said it's immutable. You can't change it. What does that mean? So let's say I'm in charge of counting votes in the country. Okay, and I'm using a classical traditional database for it. So what I will do is, okay, I will add data. I have the candidate John Doe here, 5 votes. I add it to my database. Wonderful. Now I realize, oops, I made a mistake. Actually, he got 6 votes. So we'll update the database and change 5 to 6. Okay, no problem, fixed. Now I realize, you know what? Actually, I don't like this John Doe fellow at all. And I don't want his votes to be reflected in my database anymore. So I delete it. Gone. Nobody ever knows that there was a guy, John Doe, who received 6 votes. Now, how would that look like if my database would be a blockchain? So still, I would add John Doe with his 5 votes in the beginning. And now I want to revise that to 6, but blockchain doesn't support an update operation. So the only way for me to change is to execute another add operation. So now I will say John Doe plus 1. I have 2 entries in my database now. Total is 6. Okay, wonderful. Goal achieved, right? And I think what many of you might have guessed now is blockchain also has no delete operation. So if I want to get rid of Mr. John Doe, what I have to do is I have to post John Doe minus 6. Now the mathematical end result is of course exactly the same, but what you see is it's actually getting quite transparent, right? So everybody now can see that there was a guy by the name of Simon who changed the votes of John Doe, and then he took all the votes away of him at the end of the day. That's the first layer of transparency that is being created. It's technically impossible to alter the past without it being logged on the ledger. Now, the second element of transparency is that in a typical classical setup, where multiple companies want to collaborate in a centralized model. So if we use a banking example here, so we have multiple banks trading with each other, and in the middle there's a clearinghouse everybody works with. And the clearinghouse has a ledger of the trades. So the banks or whatever other players in the ecosystem, they have to trust that what the clearinghouse is showing them is accurate. Because they can't see the ledger actually. They just see the website, the clearinghouse, or whatever interface the clearinghouse has, they are showing them. So they have to trust them. Because the ledger, as a matter of fact, is not transparent. Now blockchain, and that's why it's often also called distributed ledger technology, is distributing the ledger to every player in the ecosystem. So everybody has a full copy of the whole ledger, and all the ledgers, they synchronize with each other permanently. So if I'm the red guy here and I make a change to my ledger, which is accepted by the ecosystem, it gets distributed to everyone else so they can exactly see what change I did. As I can't get rid of the past, as everything is distributed, that's why we're saying it's transparent. And I think it also becomes clear why it's considered temper resistant, because whenever I temper, it actually becomes visible, right? How does that whole process work? I mean, I will not spend too much time on this one here as it's getting a bit more technical, but in short, when I add a transaction, and when I say a transaction, so every data point on blockchain is a transaction. So also me inputting my name would be considered a transaction. Okay, so when I add a transaction, what happens is I send it to one of the nodes or the servers that hosts the blockchain, and then this node will distribute that to all the other nodes, and then the nodes find a consensus. In simple terms, you can assume the nodes are just voting. Are we accepting that transaction according to the protocol that has been defined? So is this a legal transaction? So for example, in my voting example, the consensus protocol could say deleting votes is illegal. You can't do it. And even if I manage to hack into one of the nodes and wrestle control, I might be able to get the node to execute my illegal transaction. The other nodes will say, can't take away nodes, we don't allow it. Okay, and this makes the whole system secure and tamper resistant. And when the nodes, when they all are in consensus, okay, we accept that, they write the transaction into a block, and then the block is added to the blockchain. This is the most technical slide in the whole talk. Don't get afraid of it. What it's basically saying is how a block gets added to the blockchain. What this means from a technical perspective, right? And these hash values, these numbers here you see, you can imagine them as signatures. So every element of data has a signature. And then there's a signature of the signatures, and then there's again a signature of the signatures of signatures. And this signature is stored in the block also for the previous block. So what that creates is that if I change block number 16, the signature of block number 16, which is also stored in block number 17, is not the same anymore. And that perpetuates in all the following blocks, right? So the longer the blockchain stays in existence, the more secure block number 16 becomes, because if I want to manipulate something in block number 16, I need to manipulate all the blocks that follow. That's why sometimes you read that, okay, a Bitcoin transaction is totally unchangeable after 10 blocks, 100 blocks. I mean, depending which researcher is writing the paper, they give you different numbers, but there's a general consensus that after a certain number of blocks, you just can't change the thing anymore, because now it becomes computational so expensive. You need to have so much processing power to get your change manipulated into the chain that nobody can do it anymore. I mean, the NSA cannot do it. China, the Mossad, or whoever you believe has the highest compute power in the world, they can't do it. Okay, because it's becoming just too expensive. And this is another way how you keep your blockchain secure. Okay. Now, I started my talk by differentiating business or private blockchains versus the public blockchains like Bitcoin and Ethereum. So what are some of the main differences here to differentiate the two? So a public blockchain typically is permissionless. That means anyone can join. While a private blockchain, as is a bit in the name, there is either an algorithm that decides who can join, or there might be even a human gatekeeper, an organization who says, okay, you are allowed in, you are not allowed in. And that then also allows me to have a centralized control in a decentralized system, if this is something I require. And the main disadvantage I have, of course, is that the tamper resistance goes down, right? Because the more I centralize the decentralized system, the more central points of corruption I create. Simple example. So let's say I have a single gatekeeper, that this person could potentially be private, right? And that, of course, is something I'm trying to avoid. Okay. Now, the advantage of a private permission blockchain is mainly that I can secure confidentiality. Because if you imagine, for example, a financial transaction, So if I'm making a trade with my friend Vijay, I mean, I might be okay Vijay knowing, I might be okay with my bank knowing, I might be okay with Vijay's bank knowing, but I might not be okay with the whole world knowing about it, right? Which, by the way, just for those of you that think about going into the drug dealing business, don't accept Bitcoin as payment. It's stupid. You will get caught because every transaction on the blockchain is traceable, right? So even you send your Bitcoin to 20 strawman till you send it back to yourself to cash out, you're still being caught because it takes me a second to trace your Bitcoin through all your 20 strawman back to you. Okay, so actually using cryptocurrency for illegal activities while it was done a lot is actually not particularly smart. Better use cash. Just as a side advice here in case you want to go into any of these businesses. All right. Now, why do we use enterprise blockchain? I think some reasons I gave already. Another big reason is cost. So blockchain is very good at asset tracking. So I had a conversation once with a customer who said, you know, Simon, great, I don't need blockchain. I said, yeah, sure, I can build it without, will cost you 20% more, right? Because here I have a hammer and your problem is a nail. And blockchain is really, really good at asset tracking. I can go into more detail if you want later. It's good at sharing information and preventing information asymmetry. And it also creates a platform democratization because the central middleman sometimes can be eliminated. I say sometimes because not always. And it also creates a trustless environment because if I'm transacting with you, you don't know me. But what you know is I can't manipulate the ledger. So whatever is written in the ledger is the truth. So you might not trust my integrity, but you can trust the integrity of the system, which might allow us then to perform a transaction with each other or deal with each other, which otherwise wouldn't happen because you would be perpetually suspicious that I'm not giving you all the information or that the information might be manipulated in one way or the other. Last reason, and this is another buzzword you might have heard a lot, is smart contracts that have a very high automation potential. So let me talk a bit more about smart contracts. So in short, a smart contract is a computer protocol that executes a transaction that is traceable and irreversible. That's why it's using blockchain, because I want it to be irreversible. Right? Now, you don't need to read that definition. I think it's better I explain it to you with an example and a shorter definition I normally use. I mean, it's just a program that performs a transaction when certain conditions are met. So, for example, from the financial services industry, so let's say I have an option contract between two parties, which stipulate that at a certain strike price, the option executes and equity will change hands for a certain price, right? Then the smart contract can automate that process. So once the price is reached, the assets will be swapped and nobody can stop it. That's why the smart contract is interesting. So again, I'm making a deal with you to buy that asset for a certain price when this price is reached at NASDAQ, for example, and the event happens. You don't have to trust me that I'm good on my word. You can trust the code that the code will perform the asset swap and I can't stop it anymore, right? And this is where smart contracts become interesting. Another example here would be flight delay insurance or issuing dividends, or the company declares, it gets automatically distributed, or from education. So let's say I use blockchain to manage my certificates, my diplomas, my masters, and so on. So upon me presenting them to a job portal, that job portal automatically could open up to me, and because I become eligible to apply for certain jobs. Right. Now I said, so that was where blockchain is great. Now I also want to talk about where blockchain is poor. And the one simple thing I would ask you to keep in mind is speed. Technically, blockchain is always slower than a traditional database. Anybody who tells you something else is bullshitting you. Okay, it's always slower. It has to be. Even like Vitalik Buterin, so the father of Ethereum. I mean, he said Ethereum can manage 1 million transactions per second. That sounds extremely wonderful. But what you have to consider is how many million nodes and computers are in the Ethereum network. And what he's doing is he's summing up all the transactions a sharded network is creating, right? So if you would take the same compute power, which Visa, for example, is doing, or MasterCard, and you centralize that, you get a much faster system again, right? Now, I want to give you a bit of an intuition why blockchain always has to be slower. And one is signature verification. So everything that gets added to the blockchain has to be signed, because otherwise I can't identify who has performed the change. So just imagine you're processing paper and every single page has to be signed. Your speed goes down, obviously. And with computers it's the same. Then there's a consensus mechanism, as I explained earlier. So the nodes have to agree with each other that a certain transaction goes through. So this is the equivalent of, okay, in a centralized system, the CEO decides. In a blockchain, the board decides. So what is faster? Well, obviously the CEO deciding, right? Especially if there is one board member who always likes to think a lot before he makes a decision, right? Or in the blockchain, that would be a very slow node, okay? And last but not least, there is data redundancy. I mean, shared distributed ledger, of course, means that everyone has a full copy of the ledger. So if your ledger is 20 gigabytes, then everybody has 20 gigabytes, right? If you have 1 million nodes, then you have 1 million times 20 gigabytes, right? So there's a lot of data that gets shared. That's why often I recommend my friends when they ask me, say, look, don't use blockchain for a big data problem. That's totally wrong. That's like taking a bicycle to get from Kuala Lumpur to Berlin. Yeah, it will fail. It's not a good idea. All right. Now, last, what I'm sharing, this might be interesting for the consultants of you. Yeah, how can you go through? Is your problem, your business problem, is it a blockchain problem? So should you consider investing in blockchain for that problem? And it's a bit simplified, but it gives you a very good test, again, of the consultant, if he is trying to sell you or if he's genuinely advising you. The first question is, do you need a database at all? Do you have to store data in a place? Okay, yes. Do you have shared write access? So what that means, are there multiple people that have to update that database? If it's only you, then why use a blockchain? You get all the disadvantages and none of the advantages, right? It doesn't make sense. Then the next question is, are the writers known and trusted? Right? Because if everyone is trusted, so let's say it's just me and my brother using the system together, we trust each other. We don't need a system that, makes sure that my brother can't manipulate the system because I trust he will not anyway, right? So then blockchain also wouldn't make sense. Or sometimes when it's in a regulated environment, you're forced to trust the third party. Taking a bank, for example, I can't say I'm not trusting my bank to wire money. I have just no other way to wire money, right? So I have to trust my bank, right? And if I have to give them all the data and all the control anyway, then again, I'm not benefiting from the distributed nature of the system. All right. Now here we enter the space where blockchain potentially could be intelligent. And now you're thinking about, do you use a public blockchain like Ethereum, or do you use an enterprise blockchain or a private blockchain? Okay. One key question here is, do you need to control functionality? What that means is, do you need to be able to change the system later without discussing with everybody who is involved in the system? So you might have heard, for example, that there's not just one Bitcoin. So there's Bitcoin Cash, there's Bitcoin Gold, there's a couple of other Bitcoin forks. Because what happens is, whenever the people running the network want to make a change, but they can't agree, the network splits. And then you end up having multiple networks, which of course in most business environments is very, very undesirable, because then the data gets not synchronized anymore and certain players can't interact with other players anymore. Okay. So that's why in a business context, often it's prudent to say, hey, I use an enterprise blockchain because I need to be able to force changes through via something else than consensus. Okay. Then the next question, also again, I talked earlier about privacy. Now you need to think about, can my information be private or public, or do I need to control access? And then you might end up using a private blockchain. I'm skipping hybrid blockchain now for time, but if you have questions later, you let me know. Huh? All right, so yeah, we'll stop all the tech talk. So apologies to anybody I lost when I was too fast, and jump a bit more into the business side of things, starting with the market potential. Okay, now the compound average growth rate of the industry is 73.2%. I think that's pretty good. And IDC estimates that by 2022, the industry will be $11.7 billion strong. Okay, so that's about the size we are looking at. And that's not counting all the other industries that are benefiting from blockchain. So that's just the blockchain industry itself. Okay. Now, who is playing in that market and who are the people benefiting from it? So PwC, PricewaterhouseCoopers, did a study around that, asking the Fortune 600. And the feedback is that, okay, unsurprisingly, financial services is almost half the market. So they're leading by a very, very far margin. Then we have manufacturing, energy, healthcare. Sadly, government is quite small. I think that's an opportunity lost over here. And retail, consumer, and then entertainment at the end. I think another thing is interesting. So the same companies were asked where they are in their investment journey into blockchain. And quite a lot are in the development stage and research stage. Mindful that was the 2018 data. Sadly, there was no recent study I could use here. A more recent study by Deloitte found that only 5% of CEOs, they surveyed 1,000 CEOs, said they are not investing in blockchain, and 39% of CEOs invest 5 million or more US dollars in blockchain. So there is a significant investment in the market, because of course there are benefits here. Okay. Now I want to give you my personal opinion on which are the industries where I see blockchain adoption bringing the most value. Obviously I have to agree with PwC here, financial services. This is where the biggest bang for the buck is. They are the pioneer of blockchain. There's a high number. Okay. So there's a high number of intermediaries. I'm just getting a queue. I need to finish in 3 minutes. So I will have to rush now. Supply chain, I think there's a lot of value. Healthcare is interesting, and government as well. Government especially because blockchain is transparent and you can't manipulate it, so it's incorruptible. And I have yet to meet a citizen who says, I want my government to be maximum corrupt. Typically it goes in the other direction, right? So I think there's a lot of value to be added here. I wanted to go into a couple of examples, so I have to skip some, but this is a Malaysian example, so I want to share it. So one interesting thing, if you think about blockchain, what it can do in financial services. Today, if you have a golden saver account, that's about the interest rates you're getting, up to 1.75%. While at the same time, government bonds, so Malaysian government bonds, they trade at coupons of 3.3+%. Now, interestingly, almost no individual Malaysian has an MGS. So individual Malaysians are somewhere here in the chart under others. Now, why is that? Because lot sizes are 3,000 ringgit, sometimes 5 million ringgit. So it's not so easy for the little guy on the street to obtain an MGS in the first place. And blockchain could help here by tokenizing bonds. So I could have a 5 million bond, break it down into 5 million tokens, and then make these individual tokens tradable via an automated system, which would make it cheap and accessible for everyone. From the physical realm, I think the diamond tracking example here is good. So some of you might know there's blood diamonds, and there's a real desire to keep conflict diamonds out of the ecosystem. So Everledger, what they did is they established a blockchain system to trace diamonds from the mine even till the secondary market where they are being sold. So that when you buy a diamond or a ring that contains a diamond, you can be sure it's not a blood diamond. So they provide provenance. Another very nice providence example is Walmart. So what Walmart found is that before introducing blockchain, they wanted to trace something else, so they get sued left, right, and center whenever there's a problem with the food they are providing. So there was one VP who took out a mango of a Walmart and then went to his team and said, I don't care what you do, you tell me where this mango is sourced from. It took the team 7 days to figure that out, and there was 100 people working. All right. Now, after they introduced their blockchain tracing system, now it takes them 2.2 seconds to track a mango in any Walmart in the US, right? And that was so successful that they have been rolling it out till date, yeah, to a lot of other products, including multi-ingredient processed food, which is of course really, really nice, especially when you have to prove in a legal case that it's not your fault, but your supplier's fault. Okay. I think I skip over the vehicle transfer one. I think healthcare will also skip over. I think eKYC is another very interesting case because blockchain is also a data privacy technology. So it can also be used to protect my information while allowing me to share it with people I trust. It's the so-called self-sovereign model. And another interesting example, I think, especially in the Malaysian context, is e-voting. Blockchain is a wonderful technology to track votes. That's why I keep using that example. Because if I use an electronic voting machine that is connected to a blockchain, I can make sure nobody can manipulate it. And you can recount it 100 times if you want. The blockchain will still show you the true tally that can't be manipulated by anyone. And you could distribute the votes amongst competing political parties. So the probability of them colluding to manipulate the vote is extremely low because they don't want to collaborate with each other. All right, good. Then for people that are considering to enter the IT industry, I just focus on this one slide here. So if you have a computer science or engineering degree, in Malaysia, you could become a software developer, you could become a web developer. That's about the yearly base salary ranges you would be looking at. If you specialize in blockchain, your average compensation is about 20% higher. Your starting salary is an average 38% higher. And I have yet to see a graduate with blockchain skills that makes less than 20K in their first year of employment. So it's not a bad place to operate in if you're an employee, is what I'm trying to say. Now, having that said, we are jumping into Q&A now. But one last pitch I'm hopefully allowed. So Reg Technologies, we are growing quite rapidly. So if you're looking for a job, please scan my QR code. Look at what we can offer. So we are hiring people with an IT background, of course, especially if they know something about blockchain or artificial intelligence. You're very interesting for me, but also if you're a strong software developer, I'm happy to talk to you. And we mainly serve the financial services sector. So if you're strong in asset management, if you work for a fund management company, if you understand back office or middle office operations extremely well, we are looking for a senior product owner, which is another interesting position. Check it out. And or contact me in case you have any questions about what opportunities we offer. Okay, and that was my 10 second sales pitch I was promised. So we're finished with sales now, and I'm happy to hand over back to you, Joel, so we can go into Q&A.
All right, thank you, Simon, for that very informative talk. Yeah, we're thankful for the wealth of information that you've just provided for all of us. Yeah, we are quite overwhelmed actually with all the information. I'll just jump straight into the questions, but let me just ask if you've got any questions, do drop them on the link on screen, tiny.cc/askwater, or you can drop them on our chat if you're with us in Zoom or even on Facebook Live. Yeah, we'll get to it somehow. So do drop your questions. So the first question that I'd like to ask is this: does blockchain data have a certain progression? Is there a way to identify the data? I mean, you said it is completely random, but is there a way to identify? I will give you an example. For us here in Malaysia, our IC number, it has 12 digits, right? So the first 6 digits is our birth date, Then the next 2 digits is where we come from. And then the last 4 digits is other details. And apparently if it ends with an odd number, you're a male, and if it's an even number, it's a female. So is there a way, in the same way, to identify blockchain data in such a way, Simon?
Yeah. Okay. The short answer is it depends. And what I mean by that is there are multiple blockchains with different implementations. So if you take Bitcoin or Ethereum, for example, I can trace back every single transaction since when the whole blockchain started, right? So a Bitcoin that was sent to somebody 2009 for the very first time and then sent another 500 times, I can trace it back till to the origin where it started 2009. And I can know everybody who ever owned the Bitcoin or who owned a part of it. Right? So all that can be traced back with the Data Explorer based on the information that is stored on the blockchain. Okay. Then there are other protocols that actually want to achieve the exact opposite. So there's a very nice, lovely project which is called Hyperledger Indy, which is all about protecting privacy of individuals and establishing a digital identity on blockchain. And what it does is it actually makes it super hard to trace you. So if I use that technology and I share, let's say I store my name and my passport on it, and now I want to share it with you, Joel. Actually, I wouldn't share the actual data with you. I would share a distributed identifier with you, just a number string. Okay, and with this number string, you can access my information till I say you cannot anymore. Till I destroy the distributed identifier, and declare it invalid, then you still have your number string, which is great, but it doesn't link to my passport anymore, so you lose access. You can't see it anymore, right? So both scenarios, so these are two extreme scenarios, from most traceable to not traceable at all, right? And of course, anything in the middle can be designed as well. It depends what is the exact blockchain protocol you're using.
All right. Thank you, Simon, for that, Simon, for that very informative answer. Yeah. So at the end of the day, you will be able to get the string of question, right? The string of information. Yeah. Thanks for that. Okay, I've got quite a specific question here. So, for example, you talked a lot about financial services. So, for example, there's a couple of banks in the ecosystem. So if Bank A has a transaction with Bank B, would it be possible for another third party, Bank C, to view this transaction between those Bank A and Bank B? Is that possible?
So if they would use a public blockchain, that would not only be possible, but that would be visible to everyone. That's why I'm very doubtful to see the banking sector ever adopting public blockchains. Some of them do, I mean, there's the Ripple protocol out there, which is supported by a banking consortium, actually. But in a scenario like that, what I would recommend is you use an enterprise or a private blockchain like Hyperledger Fabric, for example, which provides a feature that's called channeling. That means there are certain transactions that are on the chain and they are visible to everyone. And then there are channel transactions that are only visible to the involved parties. So the third bank here could only see, okay, there are transactions happening in the ecosystem, but I couldn't see the details of the transactions between Bank A and Bank B because this transaction has been channeled between the two. And this is actually one of the prime use cases for private blockchains because sometimes you want to share some information, but not all information.
Okay, so thanks, Simon. So if it's private, it's not able to be viewed. But if it's public, then you can view it on the public domain because it is public anyway. Right. So thanks for that, Simon. I think it gives us a better understanding whether we should go into public or even private blockchain. And as you've mentioned earlier, there are benefits and drawbacks of both. We've got a couple more questions. The questions are coming in. Thanks all for your questions. We'll try and cover all as many as possible, if not all, your questions here. So Simon, so blockchain has its benefits of being transparent and secure with signature verification. It seems more suited to financial services, things like manufacturing with a supply chain in multinational companies. So do you think it's relevant or beneficial for an SME that do not need so many bureaucratic approval levels of decision making, because it seems to slow down the process even more? And also, just to give an idea, a ballpark figure maybe, what is the amount of um, uh, implementing, the cost for implementing of blockchain? Over to you.
Okay, okay. So let me first start with the SME. I mean, it really depends on the industry, right? And it depends on your use case. So I mean, we work with fund managers, for example, that have a couple of hundred employees. So I mean, they're not like tiny startups, but they're also not 100, 200,000 people international conglomerates, and they get a lot of value out of blockchain technology because they have to deal with third parties, they have to deal with intermediaries, they have to deal with data inconsistencies in their current system landscape. And they benefit from the fact that blockchain is good at moving assets around. And a mutual fund is an asset. A unit trust is an asset. Right? A bond fund is an asset. Right? So I can move that over the blockchain in a very secure way, and also in a way that is very friendly to auditors. So, for example, those of you that want to go a bit deeper into that, the Securities Commission of Malaysia, they launched a pilot project called Casta. Just Google it, you will find it very quickly, Securities Commission Malaysia, CASTA. And they issued a white paper how you should deploy blockchain in a way that is compliant and empowers the regulator, right? So as regulatory compliance is very important, not only in the financial industry, but also in the healthcare sector, for example, and a couple of other industries. Blockchain can help you to ease your integration with the regulator. And there are also even a few startups I talked to that successfully use blockchain, not only in the financial services industry. So it is actually quite possible. Now, cost-wise, I mean, honestly, whatever number I give you now is bullshit because I don't know your requirements. So every serious IT consultant will always tell you, if I don't know your requirements, I can't tell you how much it is. So I could deploy a blockchain for you for as little as 5,000 ringgit, or I can charge you 20 million. I mean, it really depends what you want and what you exactly want to achieve with it. I mean, at the lower end of the spectrum, if you want to use a public blockchain like Ethereum, you don't have the skills, you hire a consultant for a day, and they could set you up a system, and you can move, I don't know, durian tax, for example, over the public blockchain, because you don't care that people know how you're moving durian around, right? So that's something you could do very easily, very quickly, because the technology has been built for it. If you want to do something super secure, super sophisticated, very specific to your needs, and across a consortium of 20 companies, then it will get expensive. But that's not only a blockchain problem, that will be for everything else, right? So I worked in a big corporate before. I was an IT director there, and I was building reports. My budget was over 20 million US dollars to produce dashboards and reports, right? Because the requirements were extremely complex. That's why it's always difficult to answer the price question. And I know that was not a satisfactory answer. If you want more details, I would need you to send me a functional requirement specification. I think then I can answer your question.
All right, thank you for that, Simon. Simon. So at the end of the day, when it comes to finance, when it comes to money, what you need is the defining factor of how much you're going to spend, right? So well, I guess for further consultation, go and talk to Simon from Rigoff Tech. And by the way, he's got a colleague with him here today, Vijay as well, who I'm sure will be glad to answer all your questions related to this as well. Right. We've got more questions coming in. Yeah, it's indeed a hot topic. So just a simple one. how do we know if a bank is using blockchain technology when we do a fund transfer? Is there a way to know it? Are they doing a traditional transfer versus a blockchain transfer? How do we know?
You won't.
You won't.
You won't. I mean, unless they tell you, you literally can't see it, right? Because I mean, they will give you a user interface. Yeah, so like your banking website, you key in the transaction, you will not know what happens in the background. So unless they want to tell you, you will never know about it. Because I mean, using the example of Ripple here. So Ripple was created to facilitate remittance between financial institutions. So let's say you're dealing with a bank that uses Ripple. Your name will not be on the Ripple blockchain, right? Your transaction amount will not be on the Ripple blockchain, because what they are going to do is they will aggregate the transactions, convert it to Ripple, execute the remittance to another player, and then they will convert back the Ripple to whatever currency, fiat currency they require to settle the trade, right? So you have literally no way of knowing unless they tell you.
All right, there's no way of knowing. So for the one who asked the question,
Yeah.
well, unfortunately, there is no way of knowing. Well, I guess you can ask the bank, right?
And correct. I mean, you can ask them, right?
That's probably the way to go about
it. Correct.
Questions are still coming in. Let me just try and answer the next, ask the next question. What's the impact of blockchain technology on emerging business models? And what are some of the examples of how it is implemented in Malaysia specifically, and maybe some international use cases? Some examples. Well, you mentioned one earlier, but maybe one more for our local context.
Yeah. I mean, sadly, I have to say there are not a lot of implemented projects here in Malaysia. Yeah, so there are a few projects running that have not been finished, at least to my knowledge. Yeah. But I'm actually not aware of a big customer or public project where you could go now to the website and can go and directly use it in Malaysia. There are financial services institutions that use it, but you will actually not know about it. There's the same problem like with the bank. So I mentioned before, the fund management industry is getting into it in Malaysia as well as international as well. But when you deal with a fund manager, you will not know what technology they use in the background, because you will either talk to a financial advisor, a human who takes care of you and then is using the system, or you will have a website you're using and you don't know what is happening in the background. Okay. Now asking about other examples, I think, what can I share? What I can share a bit more about. Yeah, so I talked about the case of Walmart. So there are a lot of other retailers now that are also using blockchain for tracing, for provenance tracing, not only Walmart. Especially in the high value industries like car manufacturing. So the car manufacturers use that to prove that the parts that are being supplied are genuine, because fake parts are a big problem in that industry. Pharmaceuticals, also again, fake drugs is a huge problem. So also pharmaceutical companies use that for provenance and securing that the drug that goes into the package that goes to you is actually the original and not some fake or even something that doesn't work at all, right? So this is where we see usage. And as said, I mean, there are a lot of smaller companies you will never hear about that just use it as an alternative a database technology. So instead of an Oracle database, they use a blockchain, or instead of an SQL server, they use a blockchain, and they will not necessarily tell you about it. So even I wouldn't know. Right.
All right, thank you for that, Simon. Yeah, it's much clearer. There are a lot of examples, but maybe not so much here in Malaysia. I would have asked you why do you think that, but it's okay. We'll leave it for another day.
Sure.
But let's go into a specific area. So I believe we've got a couple of students and fresh grads in our audience today. So if you could give an advice to a couple of them here. So one of them is a student. TY is a student. And he's asking what courses should he focus on if he wants to get into this area of blockchain.
Yeah. Okay, this is a wonderful question. First, programming. You need to be rock solid as a coder first. If you can't hack, forget about blockchain. You're wasting your time. Okay, so this is the first skill set you need to develop. Now, programming language-wise, Solidity is one thing that is pushed a lot, especially by the Ethereum community. Now, personally, I'm big respect to the Ethereum community, but I'm not a big believer in the protocol. So if your goal is to work in the open source community, I think Solidity is a very good skill set for you to pick up. If you want to work inside a business, or if you want to deploy blockchain solutions into enterprise, like what we are doing, I wouldn't focus on that. One safe bet is if you learn the Node.js framework, so JavaScript, and then pick up the Node.js framework, because most enterprise blockchains, they have either an API or they have frameworks that support that component. So that I definitely would pick up. Now, if your university offers a blockchain course, of course, yeah, go take that one. I think this may be me stating the obvious. Yeah. Another thing is you can also reach out to businesses. Yeah. So, for example, Rig of Technologies, yeah, we have 5 to 10 internships every year, right? So this is another opportunity for you to learn how to use blockchain technologies. In the past, we have also done courses at universities as well, and not only short talks. Yeah, one university with the 3-day program to get people into developing a blockchain solution, right? So try also to reach out to businesses that are in the space that is interesting for you, because, and this is maybe more general advice to students. Yeah, so I'm a computer scientist as well, right? And 95% of what I learned at university I never used. So I think one advice I would give my younger self, if I could, talk to the people you want to work for, understand what they need, and then learn that, right? Don't just learn what is on the curriculum. Yeah? You will waste, like I did, 95% of your time and only deriving value from the remaining 5. So doing that research, figuring out what they require, is important. Giving an example, so I just advised you, hey, use Node.js, because that's something we use, right? If you go and you ask Intel, which supports Sawtooth, they might tell you, hey, go into C++, C#. That's what we need. So you need to think about where you want to go, and then based on that, you can strategize what are the right courses for you to take, and especially also what are the right internships for you to do, because you need to build experience. Just coursework will get you nowhere. So these well-paying jobs I talked about, they go not to students that learned the right programming language and that visited the course. I mean, they go to the students that took the time to spend 2-3 months, half a year in an intelligent internship, and picked up some of the real life skills.
Right. Thanks for that, Simon. I think it's very valuable advice. I wish I would have heard that kind of advice when I was studying as well. So basically, work backwards. So find out what the industry needs, and then you go backwards. What are the skills that you need to pick up so that you can help, you can serve in that industry. Even when we were studying, we knew that at the end of our studies, within 5-10 years, it would be obsolete. Like the knowledge would have evolved. There'll be new ways of doing things. And I barely graduated like 10 years ago. So and things have changed completely. So thanks for that, Simon. Maybe just one more question because of time. I hope you guys don't mind if we just overshoot a little bit. So there's a long question here. I'm just going to read it out straight from the Zoom chat. So it's been a decade, and apart from cryptocurrency, no one has come up with a compelling reason to use blockchain where legacy methods, when properly designed, can't do. Banks are experimenting, but it's not yet mainstream. When governments and enterprises are done experimenting with blockchain, even as legacy designs continue to mature using secured hashing and distributed networks, do you see that it's likely that blockchain hype will end like a segue due to higher resource costs? So this is a real question, but I mean, you could take it as a challenge as well for the whole blockchain industry.
And it is a very fair challenge. So let me answer that with an analogy first. So blockchain is a specific tool for a very specific problem. And the problem is I need to create a system that is being used by multiple parties that don't trust each other, and that need to be 100% sure that whatever happens on the ledger is transparent, shared with them, and can't be manipulated. Okay, so this is my problem statement. If this is not my problem, then blockchain is likely not the technology I would recommend. Okay, so I fully agree with you. Now, so I myself, I'm still scratching my head a bit if remittance is really the best possible use case for blockchain. But there are people pushing hard for it, and they might be right at the end of the day, and I might be wrong. Right now, I think there are use cases where blockchain will prevail because the architecture just makes sense, right? So for me, for example, what Everledger is doing with their diamond provenance, it makes 100% sense because the financial incentive to manipulate the system is huge. I mean, the value from a diamond, of the diamonds that are being mined in the world through the supply chain grows from 15 billion to 70 billion US dollar, right? The financial incentive to do hanky-panky with that system is tremendously big. So there are a lot of people that will try, and they have a lot of resources. So using a technology that is tamper resistant is very important. Now, what you might say, hey, I hire an army of cybersecurity specialists, I create a central system, and I super protect it against everything, and I will achieve the same thing. And I would agree with you. I would say, yeah, of course, you will achieve the same thing. It's the same thing. Again, I can use a sports car to drive to KL City, or I can use a lorry. I mean, both will get me there. They will get me there at different speeds and at different costs, right? But both is possible. And I think this is the comparison here. Yeah, there are, in my strong belief, use cases where blockchain makes a lot of sense. I also think the financial industry, especially the parts of it that are highly regulated, will move to blockchain over time, just because as the global regulators understand how much power they can gain from such a system, besides it being distributed and largely being created by anarchists, it can actually give a lot of power to regulators. Because imagine a system where nobody can manipulate it, right? So I'm regulating remittance in Malaysia. I'm regulating trading in Malaysia. And I have a system where all the fund managers are on it, all the banks, all the intermediaries, trustees, whoever's in the ecosystem is on it. And I can be 100% sure it's never being manipulated. I think if you would talk to a regulator today and ask them, okay, are you 100% sure nothing is manipulated? If something is manipulated and you say, yes, you're sure, you drop that now. None of them will answer yes. They will say, nah, I think we are overall in control, but that there's nobody having done something shady in the whole country, I wouldn't promise. That's maybe a bit too much. Now, if I would have a blockchain system, maybe being forced by regulation, so it could be the regulator saying, hey guys, you want to do business in my country? That's the system. You use it. Otherwise, you can't do business here, because otherwise I can't be sure that you are not trying to cheat Malaysian investors. That is another very, very strong use case I see. And maybe it won't happen in Malaysia, but other countries are a bit more top-down in their way how they approach things. And there we very well might see these kind of scenarios becoming reality.
All right, thank you, Simon. Thank you. That is very informative. Yeah, a lot of stuff that we've learned. I'm sorry for going a little bit above time, but I'm sure all of us found it very informative as well. So maybe just a last question. Somebody asked this: will the slides that you presented earlier be provided for us. Would that be possible, Simon?
Yeah, I can share the slide in PDF form. So I send it to you, Joel, or
Sure. Yeah,
okay.
send it to me, and then I'll will arrange to send it to whoever wants. Maybe what you guys can do, if you would like a copy of the slides, do drop us your email address so that we can specifically email those of you who need a deck of the slides to be sent to you directly. All right, we've almost run out of time, but we want to thank Simon for being with us this evening. Why don't you just give him a thumbs up or a virtual clap. If you could give him a tap on the back, well, you can give him a virtual tap on the back and drop in the chat. Thank you so much for being here and how you appreciate Simon for speaking to us today. All right, so thanks, Simon. Looking forward to see you again. We may have a part 2 because there's so many questions that we haven't even covered today. All right, with that, we would like to say thank you again. See you around again, Simon.
Thank
Okay.
you. It was my pleasure. Thank you, everyone.
My pleasure too. Okay, I just like to give you a couple of announcements, a couple of highlights for the next week. So next week we will have on Wednesday a live talk. This is by Alex Stark. He's in the Ravi Zacharias International Ministries, and he's going to be talking about a very interesting topic: doubt, a guide for humans. So if you've got doubts about life, about religion, is there a God? Is there not a God? What are you here on earth for? You know, all these type of doubts that you have, these questions, go ahead and join us next Wednesday. It's a bit different from our normal timing, Wednesday at 8 p.m. Register at the link that you see on screen. The places are open right now, and register as soon as you can because places are limited. All right, so that's on Wednesday. But next Thursday, we've also got our Biz Talk happening as well. And next week is going to be very interesting. Something we've not done here before is that we've got 2 speakers that are going to be speaking with us. Both of them are executive recruiters. One is Vincent and one is Kimberlyn. So Vincent is with Pentagon Plus, and Kimberlyn Lu is the country manager of Robert Walters Malaysia. So both of them are going to have a dialogue together with me and talking about building a thriving career post-crisis. So what are some of the skills that you need? Well, you've just heard from Simon that he's hiring, you know, his industry, his company is hiring. So what are the other skills or industries that are hiring? What are skills that you need to hone in order to go into those industries? So actually, it's similar to what Simone just mentioned just now. It's working backwards. So they're going to tell you what employers are looking for, even in this time of post-COVID-19 or RMCO, even right now. What are employers looking for? All right. So do sign up. The link is open even right now. Go ahead and log in because our places are we get filled up very fast. So do sign in as soon as you can. All right. So that's all from me today. Before I close, let me just remind us that if you've got any questions or anything that you'd like to connect with the team here at Workplace at the River, do drop your details. This is like dropping your business card at the end of a networking session. So do drop your details at tiny.cc/waterconnect, and we'd be glad to connect with you to find out about your industry. Maybe you can even suggest people that want to talk at this Biz Talk. Or if you want to connect with like-minded people or those in your same industry, do let us know and we will try and connect you. We're all about empowering the workplace, all right? So thanks for being with us this evening. My name is Joel. I'm part of the team at Workplace at the River. It's been my pleasure to host you this evening. Look forward to seeing you again next week. Bye-bye.